What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Today I'm bringing to you another Mogul listing. This is the Wade. It's a multifamily property in Tampa, Florida that's being run as a pad split. I think it's interesting that they're saying it's a single family residence. It's actually, there's a single family home, and then behind that there's a duplex. And so all three units are being rented out as a pad split. Let's see what they sent. I just copied and pasted their bullet points from the email into this to try to make it easier so I'm not switching back and forth so much. So saying, 3 units set up, just like I said, 13 bedrooms, 4 bathrooms across the property. Either Ike or Brad, there was some discussion in the Discord about this, and one of them posted, I think it was Ike, posted, how the setup was, that it's the main home is 8 bedrooms, 2 bathrooms, and then the duplex is set up as a 3-1 and a 2-1, and that seems to 3-1, 2-1 is 5, so that seems to get us to 13 bedrooms and 4 bathrooms. So, which would mean that there's 0 en-suites. We're always trying to figure out how many en-suites there are. Because you get a little bit higher rent for those. It's within 200 feet of a bus stop. They have multi-year of operating history, which is, I love to see that. The pad splits that I have with Mogul that have done the best so far have, they just bought the in-place income and are operating it exactly how it was. They mention that they have a direct comp and that we're getting an attractive basis. This is what we're going to talk the most about, because this, I think, is a little bit misleading depending on how you look at that comp. And so there's a couple of different things, but okay. Continuing on, year one income, they're underwriting $107,000, and I believe they said that's actually below the trailing 12 actuals, which I love it when they do that. I want to see, some conservative underwriting. So they're projecting that this year is going to be not quite as good as last year. And that creates an 8.25% year one yield, which is stronger than we've seen in a lot of the recent ones. So, so far, a lot of things that I like about this. Average yield over the hold period, 12.1%. Annual IRR, 12.2%. And they're calling this a core property. Which, buying in-place income, not changing the business model, no mention of value add. I can see that. One of the issues I've had, with short-term rentals being called core is that, you have very high fluctuations in revenue. I think the pad split is a little bit more stable product. I really don't have any problem with that on this one, where it's not that, when they've called one's core or core plus where they're doing a full conversion, that seems like a stretch to me, but I'm happy with that. I'm going to do a couple of the easy things, get them out of the way first. So FEMA flood map looks good to me. It appears to be in zone X. The listing actually mentioned that as well, so I like that. They also in the listing mentioned an evacuation zone, which I think has to do with when they do when there's hurricanes. I'm not really up on that, so if that's something that is important to you, you might want to dig into it a little bit more. I mean, that's true for all of this. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please feel free to use those links, but understand that you need to do your own due diligence, both on the platforms and on any properties that you see me talk about or that you find on those platforms. Just because I'm investing in those or not doesn't mean that it's the right answer for you. I just realized that I have my headphones on and I don't really need them on anymore, and I look kind of silly, so I'm going to take those off. It shouldn't impact this whatsoever. I was watching a video right before I started doing this. Anyway, you just want to do your own due diligence on those things. I'm just trying to share my insights and what I'm doing and my experience with all these platforms, but it is very much still an experiment, fractional real estate investing in general. Although it's been going very well for me overall, I have certainly had some failures, even on Mogul, which is my favorite platform. My short-term rentals are performing horribly at the moment. Also in the description of this video, I have a link to the Discord that I've set up where we have literally hundreds of other people interested in fractional real estate investing. A lot of them sharing ideas, thoughts. We have a lot of lurkers, and I'd like to encourage all the lurkers to get involved a little bit more. But a lot of people sharing their, asking questions, sharing their strategies, sharing new platforms or news, all of that. And that's what, I'm really hoping to achieve by doing this video or these videos, and also having that Discord. So all that just to say, whenever I mention doing your, you want to look into something on yourself, that's what triggers that do your own due diligence talk. So in that disclaimer. Anyway, yeah, the flood map looks good to me, but again, you want to make sure you're comfortable with it. When I pulled up the spot crime map, we've seen this in a few other areas where they just have all these little question marks. I opened a whole bunch of them. Most of them appear to be either a misdemeanor or a disturbance. This is only like a week, or maybe not even a whole, let's see how much, going back to the 25th. So a little over a week. Oh, let's close that. A little over a week of crime to generate that. If you actually zoom in, nothing too terribly close. And so this is for the pad split business model. It's actually a little bit better than I've come to expect when I've been looking at these. So I think that's a good thing. But again, it's a short slice of time. You can use Neighborhood Scout. You can use a lot of other things to look up crime maps and see, what you think about that area. And I would recommend that you do that if you're thinking about buying a piece of this. Okay. I didn't actually dig into, I'm not going to talk about the market. I just did another video about a Tampa property and talked about the market a little more. If you missed that one, I don't remember what the property name was, but if you find it on Mogul, then you can search for the name on the channel if you're interested in hearing about that. If you recall, I'm trying to do these a little bit quicker because I am just putting out, more videos lately, or they're putting out more properties, and I'm trying to keep up. Also, somebody mentioned that the sound quality was off on my last few videos. I think I fixed that. If anybody ever notices that in videos, please put it in the comments. I have a setting that I somehow have accidentally turned on a couple different times, and just have to, and don't realize it, because when I listen to it back, it sounds perfectly fine on my computer. But I've noticed that whenever somebody complains, if I fix that's the next video, then they say it's perfectly fine. So anyway, please let me know in the comments if this one sounds better, and if not, also let me know, or in the future when there's problems. Let's see. Oh, okay. Now I'm freezing up my computer here, and I don't know why. All right, there we go. What else do I want to tell you about this? Well, so the main thing I mentioned, they said, they have how do they say this? It's an attractive basis compared to a direct comp a few doors down. Okay, so what are we paying for this property? The purchase price is, where did we see it? $745,000. They only give us this one comp, right? Which is, just a few doors down, and it's it's a single family home with a duplex in the back. So on the surface, that sounds perfect, right? Perfect comp. It sold in April of last year, which is quite a while back, which is one of the reasons I wanted to look at the home price trends. Okay, property prices have gone down a little bit in the last year. If you remember, we talked about this when we were talking about some of the other multifamily properties, is that multifamily prices don't perfectly mirror single family. So sometimes you have a big decrease or a big increase in single families, and the multifamilies don't follow suit because it's a different target market that's purchasing them. And so different demand for those, sometimes, like in my market, the multifamilies have done really well compared to a lot of the other property types in this area as far as holding up in value. But anyway, it's a good point to look at. Okay, a year ago, properties were 2.9% higher. And, this is a pretty familiar shape of the home price trends map, but it is much flatter here than we've seen in a lot of other markets. And Zillow thinks this market's going to go up 0.4% over the next year. All those things, keep in mind when we're thinking about this valuation. But so one of the things they're saying, okay, they're looking at this property was 3.4 thousand square feet, and the subject property they're saying is 3.2 thousand, right? And they're saying 3187. If we look on Zillow's only got our property at 1,600 square feet, and that's because that's the size of the main house. So I expect this estimate to just be completely wrong, and it's $340,000 short of what we're paying. I think this is completely useless information. Realtor does have, or has a different square footage. They have 2695, and I actually think this is the right number, 2695, to be comparing to the comp. And I'm gonna dig into this a little bit. So I pulled up the public records in the county, and so they show you this is the main home, and this is a finished enclosed porch. So are these, and this is a finished garage. And then this is the main, the base living area, which is only 1,080 square feet. And so this is the main structure. And so they're saying, okay, the main structure is 2,063 square feet, but only 1,595 is heated. And typically, Florida could be a market where they look at this differently, but I've never worked anywhere where when you list properties for sale, you use the gross area versus, like most places, you either use the heated square feet or the air-conditioned space as your number. And so if you look at the heated area, and then also this is the second building, so this is the duplex. If we add those two numbers together, 1,595 and 1,100, which is the heated area, that's what Realtor's using, right? That's how they get this 2695. And so I wanted to do an apples to apples comparison and see, okay, well, so this is the comp that Mogul is saying, oh, this is a perfect comp. It's right down the street. And so we're going to use this, and we're getting a deal because we're paying less than what they're paying for it, or than what this was paid for, even though, prices have come down since then. But so I did a little math here. Then I looked up the comp that they're using and looked up the same thing, right? The gross area and the heated area, which there's not as big of a discrepancy there. And then the same thing, gross area, heated area, not as big of a discrepancy there as well. But so you can see with our subject property, we have and it's really just the main home, right? And it's because of this 432 square feet. I think this is the largest portion of this, right? And which is the garage. And so this is really just an open question, which one if it's very accurate or not. So what I did is I looked at, and I think I'm going to make this a little bit bigger. I've noticed when I've watched these videos back that sometimes my little Excel models are just way too small. So this is what I did. I did some math. I took our subject property, the Wade, and then I took 909 East. Oh, and I think it's Cayuga. I think I put the wrong thing in there. Right? Is it? No, I'm not sure. Maybe it's Cayuga. It's a C. It should be a C. Spelled that wrong. And so let's see. Looked at the total price, $745, but in $770. And so then I did it looking at, per gross square feet, right? So I took the total gross square feet based on the county numbers and did the same for the Wade. And so for the comp, it was at $211 per square foot. What we're paying for the Wade per square foot is $232. So based on the gross square footage, we're actually paying a 10% premium over that comp. So this is kind of looking at it the way that they are trying to, although what they're doing is they're taking the 32, which is our gross square footage, and comparing it to the 34, which is the heated square footage of the comp. So that, I didn't even look at it that way because I think that's just clearly wrong. We have to do it some sort of apples to apples. And so in that way, it looks like we're paying about 10% too much. If we look at the heated square footage, though, which is what I believe is the best metric, if it were a single family home, there's no other way that I would look at this, right? I think it's just very clear everywhere I've ever worked that's what we're looking at. That's the quote unquote living space of the property when we're looking at valuation. And so if we do that, then we have the 2695 versus the comps 3437. That means they're paying $22 or $224 per square foot versus we're paying $276 per square foot. So we're paying a 23% premium, right? I'm saying 123. I should have subtracted one from both of these, right? But it's really, we're paying 110% of what they are, or 123%. So a 23% premium. I should have done this better, because it's really a 10% premium and a 23% premium. But I think you guys get what I'm trying to do here. So then I thought, okay, well, let's look at the implied value. Like, what should we be paying for this if we were paying the same dollars per square foot as the, what the comp sold for? And so if we were just looking at dollars per, on a gross basis compared to their dollars per square footage, we should be buying this for $677,000, implying that we paid a $67,000, or we're paying a $67,000 premium. If we're looking at it on a heated square foot basis, it's significantly worse. It's a 603, implying that we're paying $141 or $141,000 premium. So from a dollars per square foot basis, it looks like we're significantly overpaying. At a minimum, we're paying 10% too much, and possibly as much as 23%. Now, does it make sense that this is a property that would sell based on, dollars per square foot, like single family homes? Or is this really a multifamily property that is going to trade mostly on income? Well, if it's mostly on income, then maybe we're a little bit closer, because when we look at this listing, they say, okay, this property generated over $100,000 in active income in 2024. This is the comp, with the owners renting it out casually, which I have no idea what they mean by that. I mean, they might just mean that they're not really, professional landlords. They're just renting it, to whoever. But this sounds like long-term rental, right? They're not using any marketing tools or anything. So it sounds like they generated over $100,000. And my guess is just in rent, right? Not net. There's no way their bottom line was $100K. I don't believe. But okay, if they rented it out for $100,000 gross as a long-term rental compared to as a pad split, getting 107. Well, again, from that perspective, it looks like we're overpaying, right? Because the difference in top line revenue with a pad split and top line revenue with a long-term rental is much different. Because, for example, we end up paying utilities, with the pad splits. We're not doing that with the long-term rentals. Of course, we don't know exactly how much over 100,000, but it doesn't even matter, because we have 100,000 compared to the 107 that we're doing with pad split. Presumably, if we were using those as long-term rentals, we'd do even worse. And so it looks like, even from an income perspective, when we are comparing it to this property, that we may be overpaying. You can stop and say, well, wait a minute, we have less bedrooms and baths with this property. Well, that's because it's not set up as a pad split, as far as I can tell. Where this property that we're looking, where our subject property, the Wade, is. And so that's one of the things, and I mentioned this, I was like, if it's true that the heated square footage. So one of the things that I think could be going on is that this garage is actually now climate controlled, has AC, has heat. And the AC in Florida is much more important than the heat, but both of them do come into play. Sometimes it gets cold there. And so for this to be, living area, we need it to be heated and cooled. And if this is, and it's just improperly listed, right? Like maybe this is a finished garage that's turned into a bedroom. That would be my guess, considering it's currently being used as a pad split. Well, if that's the case, we just need that to get fixed in the public records, right? Now, it's going to change our tax roll valuations, or probably will. And so that's something to keep in mind. But I think that's something that could be going on that we're missing. And that's really, but even if you fix that, right? Like in the closest, I didn't back, put that back into my numbers. Well, and I guess I could do that pretty quick, and then let's see what happens. So let's do that. So how big was the garage? If we added, I think it was 432 square feet. So let's add that back into this. And well, no, okay, something went wrong there. I missed the 4. Okay, and so if we did that, then it looks like we're only paying a 6% premium. That's not terrible. It's certainly not. What did they say in their email? They were saying it's an attractive basis compared to a direct comp that sold for that much more. Well, no, I mean, if we're paying a 6% premium over that price, that's not attractive. It's not terrible, but in a market where single family homes have gone down in value, I think that's problematic. And so one of the things, and when I was saying, okay, which way should we value this? This property type where you have a main home and then you have a duplex behind is very popular with house hackers, where they want to live in the main home. And a lot of people that are real estate investors that don't necessarily want to have a huge portfolio, but they understand the value of real estate investing, will buy a property like this and they'll move into the main house. And, so really only the duplex in the back is the income producing property. In this scenario, the main house is, I think it's important to think about, okay, well, what do we have? We have a 1,600 square foot main house versus an almost 2,000 square foot main house. So that's where a lot of the value is going to come into play. And those types of people, the people that are buying with that in mind, they're not necessarily, using an income approach to the value of the property. They're saying, okay, I like this home. And so in that sense, it makes a lot of sense to value the main house on $1 per square foot basis, and then the duplex on an income basis. Now it's kind of a weird spot because the main house on the comp is larger and the duplex is smaller. I think you could really get into the weeds on this, but as far as, just all the surface level math I can do in making these comparisons, it looks like the very best case is that we're paying a 6% premium over what that comp sold for about a year ago, which isn't great. It's it's not horrible, especially because it's already set up as a pad split for us. But maybe that's also not great if the comp is generating over $100,000 as just a long-term rental, which, I mean, it's so, who knows what this really means as the owner's renting it out casually, right? I mean, that's just, they're saying without use of any advertising, marketing tools, minimal effort. But I mean, that doesn't sound like a pad split. It doesn't sound like a short-term rental or anything like that. But I don't know that for sure. So, I mean, this is, if I were going to invest in this one, those would be some questions that I'd ask. We talked about, I do like the Tampa market. So, okay, going to recap this, right? I like the Tampa market. I really like that they're basing their projections off of in-place revenue, and that they're using, they're not saying we're going to do better than that. They're actually being a little bit conservative, and we don't know exactly because they just said the trailing income is higher than what they're projecting. I mean, it could be $5 higher, it could be 5,000. We don't know, right? I didn't take the time to pull up the pad split calculator. That's something that you could always do. But so I like that fact, right? I like, on the revenue side, this one looks good. It does seem like it's close to, the flood map looks good. The crime map looks good to me. It seems like it's close to transit. I didn't spend a lot of time looking at the parking. There was some discussion about the parking lot next door, and whether in the Discord there was this discussion. Not, I didn't talk to anybody about it as far as at Mogul, and they were trying to figure out basically does this, could the people using the duplex park over here? It doesn't, that's not our property. This is the property. So do they park over there? I think it's possible. Are they technically allowed to, or should they? I don't know it, but I would guess the answer is no, because again, that's not our property, right? It's outside the property line. That's a church right there. So, who knows? But let's see. And this is there's not a ton of, where is there? Is that actually parking? So yeah, it doesn't look like, I think we're looking down, that there is some parking going to the duplex. I don't know how much it is, because when I was looking at it from above, you couldn't really tell. Obviously people are just parking on the grass here. It doesn't look like this is a street that you should be street parking on. It's a pretty narrow street. Oh, well, actually, though, there are some people street parking. But if you did, then you'd be blocking access to being able to park on your lawn here. So, the parking's not great. It is interesting. You got a BMW there. Well, this was probably, no, because that's just when Google's driving by. I don't know. But so, I don't love how the parking looks, but it is very close to transit. It does have a history of revenue, and so I don't necessarily worry as much about, is this going to perform as a pad split, if it has been performing as a pad split. The numbers are a little bit better than we've seen on their recent deals. And so my only real qualms with this one is the valuation, right? It's really tough when we just have this one comp. And I looked around trying to find a better comp as well, and I couldn't, right? And so I think they've identified the best comp in the market. I just think that our relative pricing compared to this one, it seems like we're just paying too much when you compare it to this one. At the same time, when properties like this come up in a lot of markets, because there aren't a lot of options. They're not as, it's not as cookie cutter as a single family home. And so someone's going to say, hey, that was a single family home with a duplex. That's what we've got here. And this is kind of like what Mogul's doing, right? They're like, it's basically the same thing, and we're getting ours for a little bit cheaper. So is it possible in the future we're going to sell, relative to what this one sells for? I think it is. I think an appraiser is going to look at all the things that we looked at, though, and maybe come to a different conclusion as far as whether or not we're getting a great deal on this one. I'm not going to buy this one. Probably even if it was amazing, I might not have, because I just pulled the trigger on another one yesterday or 2 days ago. I am still trying to go slow with Mogul, because I do have those other properties. They're all the short-term rentals, but they're not doing well. And I really want to see what their secondary market looks like. And I'm trying to not, as much as a lot of times I'd like to just keep buying deals on here. I want to make sure I don't get too far ahead of myself on any of the platforms, right? I mean, I think you can see a lot of people got in trouble doing that on Lofty. They got in trouble doing that on Landa, especially. But on a lot of different platforms where, people were just buying every deal that came up. And, when you compare it to this looks better than the past several deals when you look at it from a yield perspective, but that's not the whole story, right? I want to, yield is temporary, basis is forever. I want to make sure we're not overpaying. And, from my perspective, and with the information I have in front of me, it looks like we're paying more than we should be for this one. One other way to think about this, though, is, let's say we bought that other one and we had to convert it to a pad split. So then they didn't add any bathrooms, because it's still just 4 bathrooms. But then we had to finish out some bedrooms and whatnot. Would that counteract the somewhere between 6 and 23% premium that we're paying? Does the fact that we're getting the furniture and the operating business counteract that? Yeah, maybe I could talk myself into doing that if I was in already thinking that I'm going to buy something today. But that's something that you just have to decide for yourself. Where do you draw the line as far as valuation, right? Yeah, I guess, doing a apples to apples comparison on dollars per square foot maybe isn't fair to this deal, because we're also getting furnishings, we're also getting tenants in place, versus the other one, that may not have been the case. Although it does look like it had tenants in place, but again, it didn't. I'm assuming they meant long-term rental, and so they didn't have, there's not the furnishings, fixture, equipment type stuff going along with it. And, then you have to decide how, what's the value to that, of not having to do that, of that already being set up for us, not having the lead time. that sort of thing. And it is funny. Sometimes when I really think about it, I can talk myself into these deals because I just want to buy. At heart, I am a investor that just, when I have cash and I want to just keep buying stuff. I didn't start off as a prudent, like really conservative investor. I had to develop that over time. But I think, especially because they're putting out deals so quickly, anytime I have any question like this, I need to just stop and say, no, I don't feel, I feel like I can wait for a better deal, right? You're not judged on the deals that you don't buy, right? Because, and we've talked about this quite a bit, but it's the nature of a real estate portfolio that your losses are going to have a much bigger impact than your best winners. Your best winners are not going to affect your overall portfolio as much as your losses are going to, because of just the magnitudes, the amount that your best winners can outperform versus how much a loss can hurt you. And because of that, I'm just much more sensitive to ones that could potentially be losers than I am to just trying to pick ones that I think are going to be a winner. So that's what I'm doing here today. I am going to pass on this. If you're going to buy this one, I'm interested to hear from you. Put it in the comments, jump in the Discord, send me a DM, any of those options. If you do DM me, make sure it's me and not an imposter me. I got a report of another one today. Actually, I think a couple people mentioned once today. Find me in the Fractional Real Estate Investors Discord, and then I will have the green label for my name. Contact me there first, and then set up a DM with me. Right? Don't. If somebody's DMing you first, 99 times out of 100, that's not me. If it's somebody trying to sell you anything in the DMs, that's definitely not me. Whether it's services, investments, coaching, courses, anything like that, that's not me. So please report those people to Discord. But yeah, I'm interested, if you are buying this, to find out a little bit more about why. If you think I'm missing something, always please, throw that in the chat, or in the comments, or in the Discord. And yeah, that's it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.